हेलो इन्वेस्टर्स, वेलकम बैक टू अनदर एपिसोड ऑफ विशाल वेल्थ व्यू। आज के एपिसोड में हम लोग बात करने वाले हैं कैसे आईपीओ के बारे में, विच इज़ ओवर सब्सक्राइब्ड ऑलमोस्ट 50x. इट हैज सीन इंटरेस्ट फ्रॉम बोथ retail investors and foreign institutional buyers, and that's why in today's episode we are going to spend some time understanding what are the growth prospects for this company and what are the product and service this company is selling to Indian market. And the reason why I'm talking about this IPO on my channel is this is an anomaly. Truly, you have to understand that क्योंकि कोई भी IPO 50x ओवर सब्सक्राइब नहीं होता. यूजुअली आईपीओ 2x 3x एट मैक्स 5x ओवर सब्सक्राइब हो जाते हैं. सो इन टुडेज एपिसोड वी आर गोइंग टू ट्राई टू अंडरस्टैंड, इज इट ऑल अ like IPO mania, people are just pumping and dumping, or does the valuation and the oversubscription for this particular company make sense? So without wasting much time, let's start this episode. The name of the company is called Curis Life Sciences, and it's a pharmaceutical manufacturing company having wide range of products. They produce almost 128 crore of tablets and capsules. Apart from that, they have products in oral liquids and ointments as well. The company mainly operates in three business models. First is loan licensing manufacturing, second is contract manufacturing, and third is direct export under its own brand. And this is the place where their margins are going to be relatively higher whenever they are exporting to, let's just say, US or UK market. One key thing to note over here is before the listing and on the last bidding date, the GMP, the gray market premium of this IPO dropped by almost 25%. Now, what's gray market premium? Gray market premium is the premium at which folks are trading stocks for this company in the gray market. Or gray market is a market which is not an officially listed market. If you see the subscription distribution, qualified institutional buyer almost had a 61 time oversubscription on this IPO. Non-institutional investor has 74x. Retail individual investor had 32x, and total it was oversubscribed almost 50x. So a lot of retail interest was in this particular company and in this IPO when the bidding was going on, and it is going to get listed on 14th of November, so we can expect some listing gains when the stock is getting listed. Let's talk about the financial performance. The company is growing its revenue and profit from 35 crore to 49 crore in financial year 23 to 25, and the profit saw a modest jump of almost 3x from 2 crore to almost 6 crore, and the company is maintaining almost same, but the total assets of the company did not increase significantly. That means the return on asset for the company is good. Let's try to understand the product and services. So they have five type of products: tablets, capsule, external preparation like tropical creams, gels, ointment, lotion, dermatological, anti-infective, and analgesic uses. I'm really bad with pronouncing names for human anatomy. So, doctors who are watching this, I apologize. Then they are also producing oral liquids, sterile ophthalmic ointments. Then let's try to understand what's the business model of the company. So we have understood like there are multiple products, tablets, capsule that they are producing. Now let's try to understand how are they making money. So the value proposition of the company comes from an integrated end-to-end manufacturing capability that is WHO certified. If it's WHO certified, that means these medicines can be exported to other countries. Now let's try to understand what are the customer segment for Curis Life Sciences. First is domestic pharmaceutical suppliers for which they are manufacturing certain chemicals or certain capsules. Second is merchant exporters who are exporting Indian medicines to other countries. Third are foreign importers and wholesalers in the Republic of Yemen, Kenya, and other countries. They have mentioned a few. Then they are pharma marketers and brand owners seeking contract on loan license production. So these are the operations that's run by the company, and they are pushing the sales of their own brand and their own capsule in loan licensing production format. So what's loan licensing production? Let's try to understand that. Now let's talk about the revenue streams of the company. सबसे पहले loan licensing के बारे में बात करते हैं. The main revenue stream is loan licensing. So loan licensing manufacturing is a process in which, let's just say you have more capacity to produce medicine. There is some other company that want to produce more medicine, but they do not have capacity in their factory. In that case, you are going to enter a deal with other company that can provide the capacity, and you are going to ask them to manufacture this licensed medicine, and both the entities are going to be licensed in this scenario. So this proves that they have significant amount of capacity, and that's why they are able to get loan license deal. And this might be one of the primary source for the revenue for this company as well. Then you have contract manufacturing. Then comes direct exports and imports under its own brand sales, not import, sorry, only export. And then there is operating income using product permission charges, cylinder plate charges, job work income, blah 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 blah. Now let's talk about the most important thing. What are the growth strategies? What are they planning? So they are planning to scale up their direct export under their own brand business. That means the margin is going to be significantly higher over here. Because if you have your own brand medicine, which is life saving, you enjoy good margins. What can we say? Then they're also planning to invest in R&D for new products. Again, makes sense. They're also planning to use or leverage government schemes like PLI and SPI to expand manufacturing capacity. As I told you, this is a space where government are always going to push more capital, because you can generate good ROE in the country or in the economy. So PLI schemes are going to help companies like this small scale to scale up and become a good, let's just say, export player in Indian market. Then we have enhanced quality and compliance system to obtain additional international certifications. So the medicine and the medicine certificate that's needed for like international export is relatively different from what you need to sell it in India. And I think that's why they're planning to enhance their quality so that they can meet certain checks and bars that's needed for a company when they're planning to export to other countries. Also, they're planning to expand in Middle East and South African market, sorry, African market, and they're also planning to set up a second manufacturing facility in second Indian state. Apart from that, they are going to broaden their product range to include more specialty and biological related formulations, so that more customers, more distribution channels. Now, the profit after tax of the company is standing at 6 crore, and they're asking a valuation of about 104 crore post IPO issue, and that gives them a PE ratio of about 18. So from that point of view, company is not asking for a significantly high valuation in my opinion. Now let's talk about what's the bull case and what's the bear case. Clearly, the underpenetrated export market is going to be a big opportunity for the company. The company is having an attractive valuation of about 18 right now, so it's not overpriced as of now. The company has debt light balance sheet. That means do not have to worry about leverage a lot. And the company also has a WHO certified manufacturing facility, which again adds to the moat. Now let's talk about what's the bear case. First is the top five customers constitute almost 50% of the company's revenue. If any one of them pulls out, the company's revenue are going to impacted by a lot, and that can lead to a stock price correction significantly. Apart from that, the margins of the company will remain fragile because raw material cost can change based on trade war, import and export. Apart from that, the falling gray market premium does not add to the confidence. The gray market premium for the stock decreased by almost 25% on the last day of bidding. And apart from that, there is always an execution risk whenever you're planning to scale operations in other countries or other states. So that's the bear case and that's the bull case for Curis Life Sciences in front of you. And that's all what I have for you for today's episode. If you found this video useful, do hit the like button and subscribe to Vishal Wealth View. Bye bye. Happy investing.